Alrighty, guys, so we have to break down a stock that's down 25% over the past week or two, and it's actually down 35% from the all-time highs earlier this year, and the stock is SoFi, ticker symbol SOFI, and I want to break down more in depth what's going on with SoFi and an event today that could lead to more downside in the stock, which could open up an opportunity for us as investors that are looking to get into SoFi. So if you guys find value, hit the like button, subscribe, drop me a comment, check out my Patreon, and get your 50 free bucks from M1 Finance. All of that's linked down below. And with that being said, let's talk about SoFi. So look, just in the past couple of weeks, honestly, the past 10 days, not even 2 weeks, this stock is down from 25 bucks to now 18.50, putting it into a bear market as it's down 25%. And if I pull up the yearly chart, you guys can see SoFi was trading just over $28 per share back in February, and now, like I said, it's at 18.50, so it's down 35% from the beginning of this year. And if you guys don't remember, maybe you do, this was a SPAC. I believe the ticker symbol was IPOE. Chamath Palihapitiya brought this to market, so it went from 10 bucks to 28, saw a lot of volatility, and there's some interesting things going on which we will talk about later on in this video. But first, if you guys don't even know what SoFi is, wake up. Where have you been? Have you been under a rock? I don't know. But if you don't know, Social Finance, also known as SoFi, is a finance company that operates an online platform that provides financial services. It offers student loan refinancing, private student loans, personal loans, auto loan refinance, home loans, mortgage loans, investments, as well as insurance products for renters, homeowners, automobiles, and others. So it's a pretty in-depth, finance, personal finance type of company. And as of now, today, November 24th, 2021, the market cap is roughly $14.5 billion. We have trailing 12 months of revenue of around $870 million. So the price to sales is right around 16.5, which is a little bit rich, but then again, you have to understand with companies that are growing, and let me pop up this balance sheet, or not the balance sheet, the income statement. Bear with me here for a second, guys. With companies that are growing, their price to sales ratio is going to be more, right? It's going to be higher than companies that aren't growing. And essentially, the way that you get the price to sales ratio is you take the market cap, $14.5 billion, divided by the revenue, trailing 12 months, which in this case, again, was $870 million, and you get around 16.5. And you guys can see the growth of this company. Let me double check. Yep, you guys can see it. You can clearly see trailing 12 months, $870 million of revenue. In 2020, they did $565 million. In 2019, they did $442 million. And in 2018, they did about $270 million. So this company is growing pretty nicely year over year. And again, for companies that are growing, you as an investor, you're going to have to pay a premium, right? And since they don't make money in terms of earnings right now, they're losing money. They're not going to have a PE ratio, but we can look at the price of sales again, which is a great way to value growing companies, right? So price of sales right now is 16.5, and we have a very interesting event occurring today, which has to do with the lockup period. So if you guys don't know what a lockup period even is, a lockup period, and we're going to talk about it right now, obviously, so if you guys find value, hit the like button. A lockup period is a window of time when investors are not allowed to redeem shares or sell shares of a particular investment. These are two main uses for lockup periods, those for hedge funds and those for startups / IPOs, which I guess SoFi is in that category, startups, IPOs. And for startups or companies looking to go public through an IPO, in this case, SoFi went public through a SPAC, lockup periods help show that the company leadership remains intact and that the business model remains on solid footing. It also allows the IPO issuer to retain more cash for continuing growth. And you guys have to understand, when companies go public, right, whether it's a SPAC, traditional IPO, direct listing, whatever. When they get onto the public markets, a lot of the investors that were in it from way early, they were buying, they were investing in the company as a startup. They could literally just dump on the market all of their shares at a massive profit, because if you're in a business when it's from, a small business startup and you ride it all throughout public, an IPO, you're going to be up a lot of money before the company even goes public. So a lockup period pretty much means what it entails is these people, investors that are in, they have to hold their shares until a certain period of time, right? And then they're allowed to dump their shares or do whatever, sell out, hold on, buy more, whatever the heck they want to do, right? So the lockup period pretty much just prohibits them from just dumping out, and it works in phases. It really depends on what company you're looking at. But in this case, the restrictions applicable to the remaining 16.67% of the lockup shares held by the sponsor and certain number of the SoFi stockholders will end on November 24th, 2021, which is today. So we already had, I believe, back in June or maybe it was July, we had a lockup period expire. Now, the remaining 16.67% of the lockup shares are expiring today, the 24th of November. And as of now, we're actually seeing a pretty decent pop on SoFi. The stock's up 3%, but I'm really not convinced that it's going to hold this point. I mean, we might actually see, and I could be wrong. Don't get me wrong, guys. I've been wrong in the past. This might go up to 25 again without pulling back. But now that the lockup is expiring, right, for a percentage of the shares, about 17%, we might see more downside here. And that's kind of what I'm hoping for. I might not get the entry point, but I would love to see SoFi come down to a 16, to a 14 level again. Some of these main points of upcoming support on the chart, we're noticing one big one's at about 16. That was resistance back in the beginning of September, all throughout September now that I'm looking at it. So if we end up pulling back, we might hold 16. We might end up, as of now, it seems like we are holding 1750, which was the high point from the end of September. So if we break 1750, we might go down to 16. If 16 fails to hold, we might be going 1450 to 15, which is another big level of support from, when was this? Also in September, a little bit in August. So there could be some downwards moves, down gaps to come here when it comes to SoFi, and I'm all for it. If you guys were in my Patreon, which you get all my moves there in real time, that's linked down below. You guys know about a couple of weeks ago, maybe almost 2 months ago, a month or two ago, I forget exactly when, but I was in SoFi. I was selling covered calls, made some money, and then it ran up on me, right? Ran up to the 24 level that we're seeing, and I missed some of that, a good chunk of that run up. And now I'm looking at this dip as a re-entry opportunity. So I'm really looking at these downside gaps. Again, 16, 1450 with this lockup, expiring. We might be able to get a move down there, and it's all about patience. Just because the lockup expired today doesn't mean the stock's going to crater today. These big investors, they might trickle out over the next maybe the next year, who knows, but they might trickle out over the next week, 2 weeks, 3 weeks, 4 weeks. That's why it might see a slow bleed, even though today it's up 2.5%. For all we know, today's 2.5% move up could be a bull trap. This could very well be a bull trap, and then we start trickling down. So for me, today being Wednesday, tomorrow being Thursday, it's Thanksgiving. Markets are closed. Happy Thanksgiving, by the way. And then Friday, I think we have a half a day. I'm going to probably wait till next week to pull the trigger on SoFi. And on top of that, the overall markets are bleeding. We have the S&P down 0.25%, the NASDAQ's down 0.5%, the Dow's down 0.3%. We have the Russell down about 0.2, 0.3. So this red could continue. And the last thing I want to do is buy here the day of the lockup expiring, and then it starts trickling down even more. So keep your eyes on SoFi, guys. I think it's a pretty interesting opportunity here, and I will probably start buying if it gets to 16, even maybe 17, 15. I'm going to be buying, and I will for sure be selling covered calls against my SoFi position, considering the premiums for stocks like SoFi. Volatile stocks, the premiums are great. I've been doing that with Tattooed Chef. I've been just raking in the premium money for months at this point. I've sold so many covered calls on Tattooed Chef, and SoFi, you're next. So that's it. Hope you guys enjoyed the video. Hit the like button, subscribe, drop me a comment. Check out my Patreon if you guys want all my buy, sells, call outs, morning update videos, plus more. All that's on Patreon, link down below. And make sure to get your 50 free bucks from M1 Finance and your 2 stocks from Webull up to $1,600. Also linked down below. And with that being said, I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out.